What is going on, Future Focus family? My name is George. We talk about investing on this channel, and today I wanted to talk to you guys about what's going on in the market and try to make sense out of all of this. All right, so we're going to look at some charts and we're going to try to identify what the next logical move is for the S&P 500, and that kind of labels all the stocks in general. All right, so with all that said, let's get right into it. So before we even get into all that, I hope you guys are liking and subscribing to everything we got going on. We got a lot of stuff that I am thinking about doing on this channel and making some moves, and I hope you guys are join me along on the ride for all of that. With all that said, let's get right into this stuff. So before we get into any news or anything like that, the first thing I wanted to talk about was what is going on in the market as a whole. So as always, we look at what the sentiment is. All right. So what is the S&P 500 doing right now? It is currently down 2.25% at 3660. The number I've been looking at there is 36.6. So 3666. 0.00 is the number I've been looking at as support and resistance. All right. So we broke below that before. We didn't really stay there that long. That was last week. But now we're back down to it. Even after Monday and Tuesday, we went up 5%. All right. There was a lot of bullishness, and I'll explain where a little bit of that came from. Next, we have the Dow. It is underneath that $30,000 threshold, which is a big psychological number. So just keep that number in mind. 30,000 is a big psychological number. And if we can close beneath that for the next few weeks, that's going to provide some downward pressure. So just keep that in mind. We're down 1.63% there. On the NASDAQ, there's a lot of technology in that sector. Right there, we're at $10,730, where that's always going to react either faster on the way down or faster on the way up. But currently, that is at 3.08%. We have gold, which is down with the NASDAQ, which is not a correlation that you want to see. They're supposed to be anti-correlated, which means they do different things, but they're acting in the same manner today, although gold is only down 0.59%. So it's still above 1700. It got down to about 1615 as of late, but it looks like we're headed back up. Again, for gold, if you are a buyer, even if you want to invest in a gold miner or something like that, or if you want to invest in GOLD, which is Barrick Gold, I would do it when gold is underneath 1750. That's my number right now. It was 1800 before, but I've revised my number and now I'm down to 1750, and that's where I feel comfortable buying gold if you want to invest in gold. But we also do crypto here, so let's take a look at what the crypto market is doing. We have Bitcoin is down as well because it usually acts the same way that the NASDAQ acts, so it's down at 2.41%. We have Ethereum down 2.31% to 1332. Is still above $1,200. It's not as high as people would have expected after the merge occurred with Ethereum, but here we are. It's reacting like the rest of the market is. It didn't have a really run up even before the merge or after the merge. So I think people are just standing by right now. I think there's a lot of money on the sidelines, and people are actually being smarter about this right now. People are taking a step back and trying to figure out, should I put money in at this moment? Because Ethereum could easily go to 600. It usually moves faster than the market does. So the stock market, that is. So let's go look at the stocks. What stocks are making moves right now? So in the S&P 500 on the left here, you see that Dexcom, APA Corp, Halliburton, Coterra Energy, these are the big movers on the S&P 500. The bottom, you have one of my favorites, which is AMD, Advanced Micro Devices. It's looking very attractive at these levels. So this is one that you might want to keep in mind. So then we have at the bottom here, the most active ones today are Tilray, which is down 11.154%. And that is one of the cannabis stocks that rallied yesterday about 25%. But nothing really happened. It was just an announcement of something happening. And when you hear those announcements, sometimes you get some momentum, but then people actually think okay, nothing really happened. Why did I really buy? And then they try to take profits and sell. You have AMD here as one of the most active ones. Usually you see Apple here. I don't see Apple as one of the most active ones, but the unusual volume today is you have Tilray here, which is a cannabis stock, and you have ACB, which is Aurora Cannabis, and they're also a cannabis stock. And those are some of the big movers. ACB usually moves down faster than a lot of the other cannabis stocks. This is kind of like one of the original meme stocks that people were really excited about because it's always been one of the cheaper by dollar. So you get a share for less dollar value, and people usually get attracted by something like that. Not that you should, though, because a penny stock doesn't mean anything. Just because you're getting more shares of a company, you could be buying more shares of something that's not really relevant. So be careful when you see those penny stocks. What I pulled up here is the S&P 500. So what you see here is this blue line is the moving average, the all-time moving average. And as you can see, we're below the moving average currently. Right here, you have a few levels of support and resistance that I drew out. A level of support currently, as you can see, we're like right on it, is the 35.82 level. Right above it, we're trending between that and the 38.47 level. And that goes back all the way to 2020, 2021 time frame. As you can see right here, we were in that same threshold. So we could be establishing that same sort of channel now. What are we doing? Basically, we're waiting on something to change, some sort of news to either break us to the upside or break us to the downside. If we take a closer look, this is the year to date. So from January 1st to today, this is where we're currently at. And you could see some big movements here. This is a daily chart. So when you look at here on Tuesday and Monday, you could see that we made a move to the upside. It kind of even translated all the way to Wednesday as we continue to move up. But now we're back down. And you can see here we have the 3-month chart. We're still above that, and we took a deep low down. So why did we go up on Monday and Tuesday? Why was there such momentum there? So this is a 5-minute chart. Let's switch this to the 1 day. Why did we move up and down on such a like crazy day? You can see the big jump. Well, there's something called covering your shorts. That means that there's people out there that bet that the market was going to go up, or they bet that the market is going to go down. And when the market doesn't act in the way that it's supposed to act, that they're betting that it's going to act, they have to go and buy the actual stocks, which ends up making those stocks go up. And that's what we saw on Monday and Tuesday. There was a lot of people covering their shorts, which made the market go up. So a lot of times, like, there's bullish behavior that's actually negative. But what should you be looking at, and what am I looking at? What I like to look at, we'll shift over to right now, is the volatility index. And you see me bring this up all the time. And the reason I bring it up all the time is because it's important. We are currently at 31.20 on the volatility index, and we are not at levels that show extreme fear in the market. All right. When I see extreme fear in the market, we want to see some of those big boost up on the volatility index that we saw in previous recessions or previous market crashes. So here in 1998, 1999, we know what happened during that time frame. We had the dot-com bubble bursting, right? What did the volatility index do during that time? Well, it went to 49.52, which by today's metrics, that's not really huge. But you got to think there also wasn't that many people and that much money and that many funds in the market yet at this time. All right. We take a closer look over here. What happened in 02, 01 time frame? Something called September 11th happened during this time frame. A lot of things going on, so keep that in mind. We shift over to the financial crisis. During the financial crisis, we hit a high of 89 point, what was it? 89.49 on the volatility index. So was this a great time to buy during this time? Yes, it was a fantastic time to buy. And people that waited till they got a volatility, which they probably never expected it to go above the older highs, which were 49 or something like that. That was a great time to buy during that time. All right. Next time we got was around September 11th of September of 11, October of 11. We hit a high of 47. Great opportunity to buy. Then we got in 2015, we got a high of 53. Then in 2018, we had a high of 51. So what happened at this time? This is when the Federal Reserve, Jerome Powell, came out and said that we are going to raise rates by 1/4 of a percentage point. So 0.25%. That's what he said during that time. That really freaked out the market. The market was paranoid during this time. And it wasn't even that much of a move when you compare it to what's going on during the current crisis that we're in right now. All right. Shift it. We go back to December 18th. We had a little jump there, but not as high as the previous ones. And then we all know what happened in March of 2020, January, March timeframe. Extreme fear hit the market. We were talking about lockdowns. And during this time, we hit a high of 85 on the volatility index because people were selling everything during this time frame. All right. Crypto sold out, gold sold out, bonds were being bought at an extreme rate. You had stocks being sold out. So things were acting not the way that they should be acting. And the volatility index went bananas during this time. And if you go and take a look back at the S&P 500 during this time, was it a time to buy? Yes, because even after everything we've been through, we're like right back to those levels of that time 2 years later after a crash. So even if you bought during, this day right here, you still would not be terribly down on your shares unless you invested in some really, really bad companies. And that's kind of where we're at right now. We're like back at those uh, COVID levels that we were during this time. All right. As you can see, we've had a bunch of spikes recently. And the most recent one was about 35, 36%. The other day we had it. This was Thursday and Friday, we had a jump up, but nothing major. All right. People did take it as opportunity to buy Monday and Tuesday since it hit 35, but they quickly started selling it on Wednesday, Thursday, and today. So this is not what I'm not looking for this yet. I'm looking for at least a 40 VIX to start thinking about getting in there. I have bought some stuff, but nothing crazy. It's just been like 1% of my cash, 2% of my cash on things that I think are really attractive, but I haven't really made any major moves. And I don't plan to until I see ultimate fear. Like I see some big fear in the market. But that's just my perspective. Just wanted to take like 15 minutes of your time. What are you guys doing? I want to know how you guys are reacting in this market. Please let us know in the comments below. I love getting feedback from you guys because it makes me smarter. It makes everybody else that's watching this smarter. So, keep doing what you're doing. As always, invest in me and press that like button, invest in yourself and smash that subscribe button. It costs you nothing. Until next time.